Story from last week, right? Mankind Pharma is all set to acquire 100% stake in Bharat Serums and Vaccines, BSV as we call it, from Advent International. And it's a big deal. The enterprise value is 13,600 crore rupees. This, remember, was a CNBC TV 18 news break. With this acquisition, Mankind Pharma will now enter women's health and fertility drug market. To discuss this and more, we have with us Rajeev Juneja, MD and Vice Chairman, and we also have our in-house expert, Ekta.
Thanks very much for joining. Thanks very much for that, Rima. Well, Mr. Juneja, thank you very much for taking the time out and speaking with us, and congratulations on this acquisition. We did quiz you about this extensively just a couple of weeks ago, but nonetheless, just wanted to start by asking you about the funding of this deal. It's around 13,000 crores plus in terms of enterprise value. How will the deal be funded from Mankind's end? What is the mix of equity, internal accruals and debt?
4,000 crore rupees would be coming from internal accruals by the end of the year when this deal will be finalized. And the rest would be a mix of debt and equity both. Majority would be debt and minority would be equity. I cannot just tell you how much that would be, but yes, that would be mixed bag. It's a fantastic kind of a entity which we have acquired. We are very proud of it, and thank you so much for your wishes. We hope that we come up to everybody's expectations. We're very confident for that.
Okay. So just wanted to, understand this a bit further. So you have around 4,000 crores in terms of internal accruals right now or cash on books. All of that will be deployed towards this acquisition.
So why not? For any enterprise like us, debt, we would always like to have less. Equity is very close to us. So we are supposed to be making a balance of it, squeeze out everything and give some kind of a pressure on ourselves only to perform even better. That's a way forward to make our dream kind of a company become successful.
Okay, so what would the debt component be up to? Because you just some time ago, you raised your borrowing limits to 12,500 odd crores. You mentioned that you'll probably not even, you look at equity to be the minimum in terms of this, funding of the deal. So what can be expected to go up to around 8,000 crores in terms of debt? Would that be a fair assumption that you'll probably take on your books, 8,000 to 9,000?
Try to understand that both Mankind and Bharat Serum both are cash generating entities. We generate quite a lot of money, every year. So whatever that cash would be there, we'll just deploy that for internal accrual. It can be 4,000, it can be a bit approximately plus minus. Apart from this, debt versus equity ratio will not be crossing 2 times. We have decided internally. So that would be like that only, just to keep it play safe, conservative. And I hope that in next 2 and 3 years' time, we'll be able to just become neutral to any debt.
Okay. Equities, 7,500 crores was what you had taken in terms of a board approval. You're saying that it's going to be as little as possible because you don't want to dilute stake. So around 1,000 to 2,000 crores, give us a figure or a range upwards that you would probably be working with, which would be a maximum comfort limit for Mankind.
Comfort limit would be minimum only. In the sense, it can be anything, 20%, 25%, 30%, not more than that, from the rest of the amount after giving this 4,000 crore rupees. So it will be, in the back, this would be a mixed bag. Majority debt, minority equity, we'll see at that time only.
Okay, all right. I think we'll quiz you about the mix closer to when you would, maybe probably a couple of weeks down. But the acquisition itself, we understand that, this acquisition has high entry barriers. It is in the women's health space, critical care, and that is going to bring a lot on the table. But there was some concern about the valuations. It's around 8 times EV to EBITDA, 8 times FY24 trailing sales, 28 times EV to EBITDA on a trailing FY24 basis. Can you give us a sense in terms of the justification or the rationale behind the valuations when it comes to this acquisition?
First of all, try to understand the philosophy of Mankind. Our strategies have always been very, very clear. We have articulated our strategies a number of times. The first basically is the bottom-up approach. That was the starting actually. And in this process, we were covering 4 lakh doctors. It was our way of creating some kind of entry barrier. And next was our OTC flavor, OTC products, just to make Mankind brand as a quite a substantial brand. And third was creating some kind of a chronic business that we were quite successful. The fourth was creating a specialized division that we did 5 years back from Mumbai. And the last was super specialty business. So this strategy from day one was absolutely clear. Now, coming back to your question, by the end of this year, this would be closing, right? If you see in 26, year 26, our EV/EBITDA would be in the range of 17 to 18x. So we don't see, it's a expensive buying, it's a good buying because it has really added a lot of value, weightage to Mankind. It's not a branded generic kind of a thing. It's a company which has come with high entry barrier products, complex products, difficult to make products. Plus many other things are there. Like for example, many products are there which will be unlocking. It has a flavor of OTC. Lactair is one brand. Osopan once upon a time was a very big calcium brand, which is not. So a lot of things are there. It's a combination of things. So when you want to buy a value asset, you end up paying the right price. It's not expensive price, in our own opinion. Plus, Mankind has always played a longer game. We never have ever thought anything in short term.
Okay. On the margins, BSV reported margins of 23%. I'm not talking about the adjusted at 28%. You closed FY24 with 25% margins. What are the blended margins based on the synergies that we can expect in the next 2 to 3 years? Where would the margins on a blended basis fall once the integration is complete?
If you just deduct one-offs, any which way you look at Bharat Serum, their top line growth is more than Mankind. Their EBITDA margins are more than Mankind. In 21 to 24, their growth in EBITDA is 21%. Their EBITDA margin last year, if you just leave one off, would be approximately in the range of 27%. So any which way you look, it's attractive buying for us in terms of financial terms, in terms of having the kind of products, kind of R&D power they have got, which Mankind never had.
Okay. All right. Mr. Juneja, just a larger story about Mankind. You do have a consumer business which is quite popular in terms of its brands, but now you're looking very significantly and very closely at the chronic care segment in India. Give us a sense in terms of where Mankind would be. You crossed 10,000 crores in terms of revenue in the previous year. What is the larger picture for Mankind? Is it going to be a domestic focused company? Are you probably also going to look at entering the export market? Is the consumer business now going to become a very small aspect of the larger picture of Mankind, which is probably going to be a pure play pharmaceutical company now? What's the larger vision?
The larger vision has always been very, very clear that we want to institutionalize, first of all, Mankind. That's one thing. And apart from this, we'll always be domestic focused company, and time and again we have narrated whenever the question of export would be there, we will be interested to export something which is difficult to make, complex, with high entry barriers. And if you look at Bharat Serum's number of products, in number of cases, their products have no competition. One product I will specifically mention, that is anti-D, zero competition till 2028. They have a patent. Their antibiotics are nobody else really makes it. In one of the fastest growing market, which is infertility, they have 2 or 3 competitors. We should see Mankind going to those places where entry barriers are very high. And what's the meaning of that? Instead of having 10 competitors, 2, 3 competitors, or in some cases, no competition. Now comes the question of consumer side. In consumer side, we have hived off our consumer division because we're very confident that this will grow a lot. Who knows tomorrow that one of the products we have acquired from Bharat Serum, Lactair or Osopan, can be given to our consumer division. Time will tell us. But because these products have a consumer division kind of OTC, OTX kind of flavor. Why we have hived off consumer division? Because we want to bring right talent. We want to make it a very responsible company. Board should be different. So once you create that kind of a company where tough questions are being asked, we are challenging ourselves. We want to just make sure that right things are happening. And we are doing quite good in that as well. We launched the Praga News is doing fantastic. Manforce is good. And recently we have come in a one product, Ova News. I mean, because 78% would-be mothers don't know which are their most fertile days. We have some kind of a fascination for women products. Again, look at this Bharat Serum. How many products have come for the women's side? So not only now Mankind would become number one in terms of gynec side, women healthcare side. We have some kind of, I'll say by default, it's happening.
Okay, all right, Mr. Juneja. We'll touch base with you closer towards the closure of the deal as well to get more clarity in terms of how exactly it's going to be funded and more questions there. Thank you very much for joining in and speaking with CNBC TV 18.
Ekta, thanks a lot.
Okay, Eka, thank you very much for taking this conversation forward. We need to slip into a very short break. We'll